And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building EAs for expert advisors, that is, for the MetaTrader 4, MetaTrader 5 platforms, and just in general helping you become a better trader. And in the process, I'll become a better trader by putting these tools together and doing stuff like that. So with that, we've got a lot to talk about today. Not a whole lot going on as far as the event structure goes. However, we are looking at a lot of different changes that are taking place in the bond markets around the world that I want to point out that we could start seeing a little bit of a shift going on pretty soon. That has to do with, well, a lot of things. Has to do with a lot of things. But with that, let's go ahead and get into what we are going to be talking about first. Let's get into the risk disclosure, because you need to know about risks, because we're putting money at risk. It's your money and you worked hard for it and you want to know where it is going or not going. And in the meantime, that will you need to know about this stuff. So with that, let's go ahead and get started. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. That's the National Futures Association. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade the funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we are looking at today. First, let's talk about me some more. Here's Forex. Here is trading Forex for profit. This is my platform that I'm building right here. Here is what I should have used yesterday to calculate my loss size, or my size on my platform. I really do need to start using my own tools, because it's now that they are going from build to functional. But here is what we have. Things like this. We've got the trading journal right here that shows all my trades in my real MT4 account, one of my live accounts. So we've got that one right there. And we've got some other stuff going on with this too. You can see your performance right here. Go down here and see a nice little graph of what you're doing and take a quick shot and look at it and go, oh, that's not very good. This is not working out the way I want it to right now. That is not my total right now. If it was, I would be out of trading Forex. That is showing that my account is toast. That's not true, because I'm trading it right now. 299 trades on the dollar versus the yen, but I can see a good glimpse of what I like to trade and what works out better. For example, I've got an 82% win rate on the Great British Pound in 16 trades. So these are actual numbers too for my account. So that shows what I have done since 2023. Lately, I've been building stuff, so I haven't been trading as much. I've also been showing a lot more what do you call it? Discipline, for lack of a better term. But at any rate, let's go ahead and talk about my other thing over here. This is the MQL5. I need to refresh the screens. If anybody took any downloads, no, they didn't. For the Bollinger Band RSI Mean Reversion Pro and Bollinger Band RSI Mean Reversion Pro for the MT5. And these work well, but they don't work as well as I would like for them to. You could probably fine tune them in the inputs and make them work on a lower time frame a little bit better, but they work great, but they're not. I've got them set on for the H4 time frame, and that is like watching paint dry. It takes a long time to get a trade in. Now you're going to get winners, but you're only going to get winners every blue moon, and maybe not even that long. But at any rate, let's go ahead and get into what we're looking at today. For the Forex snapshot, the dollar is off to the races, so to speak, which is that's a good idea. Is that the number one? It's the strongest currency at the time, followed by the Japanese yen. Expect to see the Japanese yen surge a little bit higher, though, pretty soon, especially if they decide to to manipulate their currency again. They may not have to, and I'll show you why in just a minute. And then here is the risk on risk off O-meter. It is on risk off, so no one is really paying attention. No one is really interested in making any risky moves today, probably because of the Iran U.S. thing that is still going on. So let's go over here and take a look at the what is actually happening. Is that still the headline? No. Okay, Trump says holding off on new airstrikes after Gulf appeal. A lot of people are not sure what he's doing with that. Judging by that picture, he seems to know what's going on, so that's fine. Great British Pound claimant. I've got unemployment going up in Great Britain. Not necessarily a good thing. Our unemployment rate went up to 5% from 4.9. Not good for the overall economy. Good for Forex traders, though. Here's the CPI. Canadian CPI will be coming out a little bit later on today if you trade the UCAD or the Canadian versus the Japanese yen. I don't trade in either one of those, so we'll go from there. Let's see how I'm doing on my trades or this account. I'm losing. That's not good. This is a fictional $117,000 I'm playing with. Not fictional, but it is not my money, so I cannot close this account out and delete and transfer $120,000 in my bank account. If I could, I would probably not be making videos. Even though making videos is fun, so maybe I would. Who knows? But with that, let's go ahead and get into what we're looking at today. So my buy-sell trade on the euro versus the dollar. This is essentially buying, or pardon me. This is essentially, this is essentially buying the euro versus the yen, because of these two currencies cancel each other out. Euro versus the yen, buy. Which may not be the move I want to be in right now for both those trades. However, on an individual basis, they could go opposite directions. But right now they're going the same direction. So let's see what's going on here. Let's start with the US 10. And here we have the US 10. It's kind of perking up to about 4.6%. Again, this is what everybody's crying about in the media, about high gas prices and stuff like that. And it's starting to translate into inflation in the overall economy. True. However, the main catalyst to this has been congressional spending, more so than high gas prices. It's the number one problem in this country, in the United States, right now, is congressional spending. They're not going to stop anytime soon because they see it as free money. When it's not free money, it's taxpayer money, but they literally don't care. But that's fine. Here we have the U.S. 30. That's why we have elections and we get those people out, in theory. Some states are not doing their job as far as that goes, like California, but that's okay, too. I can't worry about that. Here we have the U.S. 30, and it is also perking up, which means the inflation, which means that the real estate market is not, mortgage rates are still going to be pretty high. And going up for that matter. We'll probably see 7% mortgages again. I think we saw them in 2022. We'll probably see those again coming up soon. Euro versus the pound. Pound has taken over. Look at that. Pound is taken over completely. Euro is the weaker of the currencies between those two. DXY is perking up again at 99.22, right in that area of resistance that we saw back in here. So it's not going to be really out of the woods and off to the races until 99.46. We'll see if that continues. Euro versus the dollar, down. I wanted it to go up. It didn't. So with that, this is, I'm glad it did not trigger a new loss, a new trade, because RSI is way up here at 50, and it's coming down. So it's not really coming down at any great velocity right now. It could a little bit later, but right now it's just kind of hanging out with a wide range, but hanging out nonetheless. Here we have the pound versus the dollar, 134, right at a psychological holding point. Dollar versus the Swissy, perking up just like the DXY, but not with any enthusiasm. Dollar versus the yen. This is the one that that I'm in right now, that I jumped into yesterday when I saw the headline that they could be manipulating their currency again. Let me show you what's going on here. We have the Japanese yen, or the Japanese 10-year, going up like a 3.1%. The yield is up 3.19% here. Here, the yield is up 0.48%. This is the carry trade. This is where you can deposit money on a buy the dollar versus the yen, and actually make money overnight when it closes just on the swap alone, regardless of what the price is. The difference between the two interest rates will pay you a chunk of money, and that chunk of money can contribute over time. That's why companies like Toyota or companies that heavily do business with Japan, they buy the yen, the dollar versus the yen, and they hold on to it for a long time. Now this is becoming less and less appealing as the carry trade is becoming less and less there. 2.8% to the differential is 1.8%, and we're going to start seeing might start seeing the carry trade unwind. I'm looking forward to that. We'll see what happens at that point. I've been looking for it for about 3 years, longer than that, 4 years ago. Because 2022 is when I lost a lot of money betting on the carry trade unwinding, and it did not. So that's the catalyst behind this trade, behind selling the dollar yen at 159. Another one is this great big drop right here. That is what happens when the Japanese intervene, and again here, and again here. I'm looking forward to some more intervention coming on. If this was intervention right here, they did not get the job done. So they're going to start panicking soon because their economy will fall apart. And with the 236 debt to GDP ratio, kind of to be expected. When you're spending 2.3 times the amount of money you bring in, try that at home. See how that works out for you. I'll let you know. I'll check back with you later. Or you can check back with me later, because I know where it goes. Pound versus the yen right here. Again, the same difference. This is actually a more valuable carry trade position than the dollar versus the yen, because the interest rates in Great Britain are higher than they are in the United States, and going up like a rocket ship. I'm going to hold off on the to the moon reference, but that people like to use in crypto. But this is also an indication of what could happen with this. It's awfully high. It's over 213. Has not hit 216 or 215 yet. But again, the dollar versus the yen is the major catalyst for any intervention or possible downsize, downing in the dollar versus the yen going down, or intervention by the BOJ. Euro versus the yen. I mentioned this earlier. If this were selling off, then this would. This has started to sell off. How about that? So we'll see what happens with that. This one's going up, isn't it? Nope, it's starting to sell off a little bit too. So maybe today's the day for intervention. Happened about this time a few weeks ago, or last week, 2 weeks ago. It was 2 weeks ago. Anyway, here's the dollar versus the CAD right here. Again, but it's a bumpy ride if you want to trade this. You have to set with wide or no stop losses, which is not my cup of tea. But if you really want to, you can come down here and buy in at the 135.85, and then no stop losses. Hold on to it and see what happens. I probably should have tried that. I probably will try that soon on my trade that doesn't cost me any actual money. My account that doesn't cost me any actual money. Canadian versus the yen. Sometimes mimics the oil trade. This time does not. It's kind of stopping out right there at 155.59. Here we have the oil, NYMEX. NYMEX crude oil is at 102.94, just shy of 103. Perking up a little bit, but according to this, it's down from where it was earlier today. Yesterday's close was 105. Yeah. No, yesterday's high was 105. Yesterday's close was 104.38, so maybe we're getting some negotiating done in the Middle East. Aussie versus the dollar, 71.16, sliding even further on dollar strength, USD strength. Gold, kind of hanging out at 54.40. The main support area is at 4,500. Again, we'll see if that holds. Platinum, sliding a little bit more. Palladium, sliding off a little bit even more. And silver, coming off a little bit, down to 75.86 after yesterday's slight rally. Closed at 77, it looks like. So with this, let's take a look at IGV briefly. We have the IGV right here at it's up 1.19%. Look at HubSpot, bouncing off of the disastrous news they had. Oh, Michael Burry's coming in and making some things, warning AI risks to its SMB customer base. Hey, look at that. Somebody's finally saying something. A stone company warning AI risks to its small to medium business customer base and advising to avoid the stock. How about that? So there's an investor who is actually watching these companies completely ignore their customer base in favor of AI. What's holding them up is the investment world. Otherwise, they would have crashed and burned already. Salesforce, same thing. AI displacing enterprise software eased because AI is not going to do what they said it's going to do because we can't produce the data for it. Pardon me, the data or the electricity for it. Intuit, right here, same thing. Completely forgot who their customer base was, and the stock shows. GoDaddy, let's look at them too, up 4.83%. That'll probably change today. Adobe, also. Now, I'm customers for most of these accounts, and I used to work with HubSpot. So, not work at HubSpot, but work with HubSpot. And that did not fare well either. It worked great when it did work great. Look at the video sliding off. So, it looks like people are starting to wake up to the AI bubble, the potential of the AI bubble. And here we have Upwork. Started going down here on the bottom. I used to work. I was an Upwork, freelancer for a long time too. So we won't talk about that. Let's look at the DXY. It's starting to come down a little bit more. And with that, that's about all I've got for today. So if you like this video, then hit the thumbs up button. If you want to see more of these videos, then hit the subscribe button and subscribe to the channel. And you'll be notified of when these videos come out. But in the meantime, you guys have a great one. Talk to you later. Bye.